Hello and welcome everyone for another weekly market commentary from StashAway. This week with us again our Chief Investments Officer Freddy Lim.
Hi there.
Hey Freddy, we have a lot of interesting topics coming up, especially with the start of the week being all about the Twitter and the meeting in London, right? Before we get into that, we have a couple of exciting events coming up as well in December. So on December 17th, in Singapore, Freddy will actually present his market outlook for next year and kind of do a little look back session as well, right, at what happened in 2019. That will be on the 17th of December in Singapore, and it will be on the 18th of December in Malaysia. So you can sign up for both events on our respective websites, stashaway.sg for Singapore, stashaway.my for Malaysia, Facebook, Eventbrite, wherever you can find us. There will be a way to sign up for you for those events. I think it will be super interesting to hear from Freddy directly on what he thinks is going to happen next year and kind of get an overview of what we did and how we changed portfolios this year as well, right? And the reasoning behind it, so you can ask the man directly. With that being said, Freddy, let's look at the last 2 days. One day Trump was on his way over to London. Yesterday he made it. And he's been doing quite a stir up at the NATO General Assembly meeting, right? Maybe you can start on that?
Well, he's got busy again, and the first thing he said was that he's in no hurry for a deal with China, and it gets better even after the 2020 general election. So that really sort of pared back what's been in the price of the markets, right? The markets were hopeful for some kind of a small deal. Yes. And now even a small deal may sound like a bit more remote than before. That's number one. But the real fireworks came with the rest of the meeting.
Yes.
Started with France. France has imposed unilaterally a tax on US tech firms. And in particular, it's very selective and targeted at US companies like the FANGs, yes, Apple, Facebook, and the likes. So
it's like a digital tax almost, right?
Digital tax thing.
Yeah.
They're so selective that France companies don't get included, right? Yeah. I think Trump took it very personally, and the US imposed, in retaliation to this, imposed a ridiculous amount of tariffs on cheeses and wines and the likes.
Yes.
From 10 to 15% currently, it's going to bring it up to 100% in tariff rates.
Yeah.
It's double in prices.
Quite interesting. If you have the chance to go on YouTube and watch the meeting between him and Macron, it was actually quite funny to watch them sitting next to each other after all this just happened. It was quite awkward. It's quite an awkward scene.
It's like a kid and an adult in the room.
Yes.
Talking about ISIS.
Exactly. Yes. Pretty much. And Trump even saying, even though the tech companies don't like him, they're still American companies, so he has to look out for them. That was his spiel for this. But yeah, so that's France. This is kind of what he's doing with Europe. Also South America, he, gave tariffs, took them back away. The markets don't like that either, right?
It's the so-called USMCA.
Yeah.
I think the truth is the USMCA was never having gone through congressional approval before. It was a proposal, really.
Yeah.
Very hyped, so market like that before. But the reality is that there's still a lot of challenges on the path towards being approved in the Congress. I think Trump probably played the high ground by making it difficult with new demands. That is me making the demands, not Congress, right? So there's a lot of that element in the kid himself. So not surprised. But beyond his control are several bills that's been happening,
yes,
not related to Trump, and not what he wanted.
China.
What
we got there?
Well, first, remember a couple of weeks ago with the Hong Kong protest bill?
Yeah.
It's quite hypocritical because you claim to support democracy, but the bill said that you support the protesters in Hong Kong, but in return for that, you're going to remove Hong Kong's free trade status because they are now suffering from a lot of intervention from China. So in principle, they should no longer be getting the same trade deal as before. That actually is a worse off deal for Hong Kong citizens, mind you.
Yes.
It's very hypocritical. And now we have new bill last night. It's called a Xinjiang bill. It's been a lot of, Xinjiang is an area near Tibet, and there's been a lot of talks about human rights issues when China took over governance of those provinces.
The most high-tech people tracking area in the world, apparently. So
yes. A lot of people
facial recognition everywhere.
Jail,
right? Yeah, exactly.
Yeah. it's a very touchy issue with China. Again, it's just another hot button that the US is pressing again with China, and to the point that there's a risk of the trade talks breaking down simply because of a lot of these other uncontrolled issues that's going on. And these are not Trump's doing,
no,
but sort of things all happen at the same time.
Something he can't fight at home, right? So he has to kind of go with it.
Yes.
Well, let's talk about home, right? One other thing that he has limited power right now is on the impeachment, right? I think, we had the hearings, he was invited this week, he's not going to show up to speak himself, even though he always comments on it on Twitter. Where do you see this going right now? Do you think it's going to have a chance to pass in the House?
It's becoming very high probability now. It's almost 100% certainty that the Democrats would push through a House bill after the prop is finished, right? The findings will be finished, I think, tonight or tomorrow. Mm-hmm. And they will push through a vote on whether they want to propose an impeachment. Okay. And now, however, that's not the same as actually being impeached. And also, don't forget that the Senate is dominated by Republicans who currently, I think, is not assuring that they would support any effort to impeach. So if that's the case, Trump could remain in office while being impeached. Yeah, much as same as what Bill Clinton has gone through. So it really doesn't mean anything in reality to the presidency. So most likely we have a stalemate.
Especially next year, going into the election year, not much going to happen anyway. Starting January, probably January, February, March, when all the three votes are going in, right?
So market's going to probably get a bit more noisy, but the fundamentals do not change. These are a lot of noises. We've seen it before. Yeah. We've been through it for the last 2 years by now. Yeah. So don't get surprised.
Yeah, and I think when you talk about fundamentals and also consumers, we saw record-breaking Black Friday sales in the US.
Yes.
Which also hopefully seems like it's translating that the US consumer is actually quite strong.
Yes.
Record low unemployment rate. So I think for Christmas season, right, really big for retailers, and on that side, I think we'll see probably some really big numbers coming up.
Yes, and earnings are not bad at all.
Yeah, exactly.
The only thing is that because of the trade war disruptions to supply chain, and people with sort of the corporate chiefs would just hold back on the capital expenditure, R&D, and plans. So that still sort of have some
ripple effect into next year, right?
But there's a lot of good stuff going on as well. So don't overreact to the noise.
So the next topic, let's take it a little bit more local. Singapore housing. The central bank had some comments this week. There were some articles written. I know our users read a lot of those and listen to the news here. So, and it's personal for them, right? Mm. So maybe you can explain a little bit what the topic was about, kind of what the news was.
Well, when it comes to an asset class like properties or the housing markets, things often may not be perfectly coordinated in terms of supply versus demand. So in the Singapore case, we've seen a rise in inventory. And in particular, it was reported to be about 4,277 new residential units from new projects are being unsold. Mm-hmm. And that sort of caused some concerns. And in particular, people also think about there's been a lot of efforts to do the so-called en bloc projects where all properties are being released to be redeveloped. That could add extra supply going forward. So when it comes to a not so perfectly coordinated market like housing, supply gluts is sort of developing in Singapore. So that was the buzz over here. And it's not an issue if you are a very globally diversified investor, but if you are planning personally to buy a home, you could factor this development in and be a bit more patient, since there's no catalyst for higher prices.
Ask for some discounts.
And some
if you have to buy right now, right? Yes. But so thank you. That wraps up kind of the news part of the show. Let's go over some things that we hear clients, users ask us quite a bit now, because we had a really exciting year. We launched a couple new products. We came up with a Singapore-based income portfolio. We now have StashAway Simple, a cash management solution, and we still have our long-term risk-based portfolios as well to reach different goals in life, like your retirement. People are asking us now, what's the first product they should choose, or what's the portfolio they should go into, right? So as a chief investment officer coming up with these products, who do you have in mind for each one of them? And should a person just have one or multiple ones? What is your rationale when you talk to someone and they ask you which one should I choose?
As you know, StashAway is a big believer in goal-based investing. So while you invest, set those life goals before you do so. And so we're offering more products so that you have more ammunition to have a portfolio that meets your life goals. So in this case, for example, it all goes back to financial planning.
Yeah.
So I would say personally, I would recommend people to first think about having 6 to 12 months of living expenses in cash or cash equivalent. And this particular amount is particularly suitable to be invested into StashAway Simple, which is a liquid version of a sort of a short-term yielding savings feature product.
Yeah.
Right? You get 1.9% at the moment on parking your cash there. They're highly liquid with 2 to 3 days liquidity.
Yeah.
Right? So that's liquid, near cash equivalent.
Emergency fund. Think
Yeah.
about like when you have an emergency, something breaks in your home or your car breaks down, you want to use that money to pay for that, right? You don't want to go into credit card debt
and where you don't want to let your cash sit in the
Correct.
bank doing nothing and
Absolutely.
being eroded by
Yeah.
inflation. So that's a great product for your cash management.
Yeah.
Right.
So that's actually a really good way to start building up the StashAway and then kind of branch out, right?
Yes. So first step in financial planning, we just talked about. The second step is then you say, well, now I can invest my cash balances, my savings over and above the cash. So for those excess savings, it really depends on your age. If you're a younger person who wants to grow faster, wants a global diversified portfolio, our suite of risk point on the global core portfolios will be very ideal for you to invest in. And in particular, we do recommend splitting your savings over several months, say up to 6 months to average into the markets.
Especially if you come from a high cash balance, right? Different if you're moving out of existing investments into StashAway. Very different, right? So,
Yes.
Yeah.
So that can work, but if you are a person who's in your 30s and even higher older age group, there's always a balance between what percentage of your investment portfolio should have income generation and what percentage of it could grow the value of your portfolio. So it's between a balance between income and growth. And as you get older, the more income-driven assets you would need. So really the balance will be tilted over time. So if I'm a mid-30s person, I will do very well with a third of my portfolio in income-generating portfolio. And 2/3 of it in a globally diversified manner with our core products. If I'm a mid-40s person or even 50s, I would tilt the balance the other way with half to 2/3 of my investments and income. With more certainty, more fixed cash flow, less variability with returns. And so it really depends on where you are in your life cycle.
Yeah, no, I think that really sums it up quite well what Freddy was saying there, and I encourage really everyone to start using the different goals that you can create within StashAway. And you can have as many goals as you want, right? You can have a couple children's education goals, retirement goal, because what it does is it actually makes you understand how much you need to save in a certain period of time and how much do you need to put in monthly right now. And then we'll give you the optimal portfolio for that goal, right? And manage it over the time period. So I think playing around with it, creating some goals and getting a feel for how much you should be saving monthly to reach all of your goals is a very great exercise that you can do on our platform. So
the beauty is you can do it, it's under one fee, one umbrella. StashAway Simple with this exception where there's no fee charged by StashAway. All you pay is the smaller amount of expense ratio to the fund manager for the money market fund. But all our products, you could try them out first for a few months, get a feel for it if you're not sure. I mean, with technology, investments are now very democratic. Right? There's no minimum balances, it's under one fee, you can withdraw any time, and you can choose among either goal, you can transfer cash from one goal to another as you changes your mind or you changes your life goals. So by all means, do not be intimidated with trying new things. Get a feel for it after you try, and then your plans will be more solid.
Yeah, well, thanks, Freddy. I think that's it. Thank you all very, very much. Freddy and myself will be back soon with you. I wish you all a wonderful day. Ciao.